Good, so now we must just do the calculation for the interest. He had 2 million for 6 months, and the information tells me I've got they earn 12% per year interest. So it gets 2 million times 12%, 12 over 100, but not for a whole year. He had that 2 million only for 6 months. So I must still multiply it by 6 over 12. And that gives me, if I take the 2 million times 12% times 6 over 12, it gives me 120,000. Do the same for the second portion, 1.7 million, also times 12%, 12 over 100, times, again, 6 over 12. And that gives me 105,000. So if I add the first bit, for when he the first 6 months 120 to the second 6 months 105, it gives me 225,000. And that would have been Rich's interest on capital. If I had to calculate the West's one, but it's not necessary because they actually tell me what his interest is, and they say there his is 195,000. We can just for interest sake also go and calculate and see if it is right. So West had for the first 6 months from 1st of March, he had 1,500,000, and on that I needed to work out 12% for 6 months, and that should have given me 90,000. And the second month he had 1,750,000 times 12%, also for 6 months times 6 over 12, and that should give me 105,000 because it's the same as what Rich had. If I added the two, it gives me 195,000, which is also the figure that they gave us. So I didn't have to do this calculation, just for interest sake. Now, if we give them interest, it doesn't mean that they are receiving it. They're just entitled to it. So they haven't taken it yet. They can if they want to. But first of all, we're going to record it in the interest on capital account. It is like an expense, although not quite. So it will increase on the debit side. So we're going to debit the interest on capital with both the interest amounts. So on the debit side, the interest would happen on the last day of the year, February 2015, 28th, and we haven't paid it yet. We just allocated to him. So you cannot put in bank there because we haven't paid out anything. We're just telling them that that is what they can take. And whatever they're entitled to goes to their current accounts. So it will go to the current account for, let's put in West first. These things will all happen on a general journal. And West's amount was that amount that they gave me, 195,000. And also on the February the 28th, in the same account, we don't split the interest, the expense account. It is the interest for Rich, current account Rich, still on the general journal, and he was entitled to 225,000. So let's just do the opposite of this entry. So it was in Rich's current account, February 2015, the 28th, coming from the interest on capital account on that general journal, and Rich's was, okay, we've done Rich first now. Rich's interest was 225,000. We will do the same for West. It is February 2015, the 28th, coming from the interest on capital account on my general journal, and he was entitled to 195,000. So that is, just a second. Okay, so that is what they're entitled to. At year end, like with all other expenses, we do a closing transfer. The other expenses, like if it was normal salaries, etc., would go to the profit and loss account. With all of these partners' accounts, they don't go to the profit and loss, they go to the appropriation account. So whatever is in this expense account, we will take out and put into the appropriation account. So I'm going to, on February 2015, the 28th, the last day, take whatever is in this account and put it in appropriation. Appropriation. Still do that on a general journal. All my closing transfers I do there. I must now just add the two to get to a total. And if I add it, it should give me 420,000. So that side must also be 420,000, which means the amount going to appropriation is 420,000. So in appropriation, February 2015 on the 28th, coming from interest on capital on the general journal was the 420,000. I do not put them in individually. It is just the total for the account. It's one entry. Good, so that was interest on capital. Let's look at the next one. Partners are entitled to a monthly, very important that you make sure that you read properly, because they often like to give you the monthly salaries. Remember what we're doing now? We're working for the year. It's the whole year's amounts that the partners are entitled to. So these two partners were entitled to monthly salaries of 60 and 75,000, and we have to first of all convert it to a year figure. So in other words, we must simply multiply both by 12 and then put the transaction through. So they've both got salary accounts. Again, it's like an expense, so it will increase on the debit side. So February the 28th, and the opposite account, again, we haven't paid it. It's just what they are entitled to. So the opposite account will be their current accounts. Whatever they're entitled to goes to their current account. So current account West. And I must quickly calculate whatever the amount is. When you do a calculation, next to it there, I'm not going to do it on the side here. I must try and fit it in on the line next to where I write the account. So I'll put brackets and I'll put that whole calculation in there, and the same for Rich if I had to do it. There will normally then be a big space on the answer sheet. Now in this case again, I will show my calculation in brackets next to the words current account West. I'm going to show what I did. For West, I took 60,000 times 12. West 60,000 times 12, and that would give me West's salary, which is 720,000. So West's salary is 720,000. Again, it would be the General Journal. All of these would be on the General Journal. Going to do the same for Rich. Rich's monthly figure was 75. So I must simply take 75,000 times 12, and that should give me 900,000. So his salary is 900,000. Same February 2015 on the 28th. It's entitled, so it goes to his current account on the General Journal. Good. So in the current accounts, from the salary accounts, so salary West, from the General Journal would now be 720,000. And do the same for Rich. See, with their salaries, they've got individual accounts with the interest as well as later with the bonus. It is in a combined account. So you haven't got Interest Capital West and Rich, you have only got one interest, but salaries, they split. Rich's was 900,000. With the salaries, same as with the interest at year end, we close them off. Whatever's in here, we're going to take to the appropriation, not the profit and loss, the appropriation account. So both of them will go to appropriation on the General Journal, and the amount was 720,000. Do the same for Rich. On the 28th, going to appropriation on the General Journal, and his was 900,000. Good, so in the appropriation on the debit side, because we credited those accounts coming from the salary for West, on the General Journal was, his amount was 720,000, and the same with Rich. Salary Rich on the General Journal, and his was 900,000. Yes. Good, so then we can move on to the next one in the next part.